You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome back to Options Insider Radio and our series of interviews and conversations from the 2025 Options Industry Conference. And next up in the Southern studio is a newcomer to the program and indeed to the network. He is Matt Fox, the CEO of SpotGamma. Matt, welcome to the Options Insider Radio Network.
Thank you for having me.
Well, Matt, as we like to do with all of our first-timers, let's start with a bit of your background in the world of options. And we never had anyone from SpotGamma on, so also, what the heck is SpotGamma? What are we talking about?
Happy to cover both. So personally, I was a biotech hedge fund manager from 2003 to 2012. So traded hundreds of millions of dollars of notional value of options, but really fundamentally. So SpotGamma has been around since early 2020, and we launched with the mission to help show individual investors, both retail and institutional, how the options market is driving the stock market. So our founder, Brent Kachuba, was at Bank of America and Credit Suisse, developing the algorithms that helped analyze exactly how the options are driving the S&P throughout the early 2000s, and then experience at a large market maker and family offices. So between him, our team of analysts, and our whole company, our goal really is to help unveil how options flows drive stocks and equities.
Well, that's a hot topic. I know that you got a chance to catch Henry's panel yesterday at the end of the session. You saw that slide he posted at the end of it. He snuck it in there about 0-day time of execution. Did you see that?
Yes. So we know Henry well. He's a great guy.
He's a horrible human being. You don't have to lie to us here.
We do a lot of work with the SIBO, so we're very familiar with Henry and his team and their work. And we do a lot with 0DT and next expiry options at SpotGamma.
And were you surprised, like a lot of people were, that, I mean, the open and closing spikes, I don't think that surprised anybody, but the systematic nature of it, every half an hour or every 15 minutes, like clockwork, the spikes of volume, the bots are all programmed the same way. It was eye-opening, I think, to say the least.
Yeah, I believe it was a great thing to show. For us, it wasn't new. What we do is we look every day across all exchanges at how the data is showing us where options are driving all of the names, whether they're major indices or individual U.S. equities. So our real-time indicators project that out. So we see all of those spikes. And we actually analyze whether or not they're going to move the underlying name or whether they're actually being hedged off in real time against stock or against other options. So the activity, both the overall volume increase and the timing and nature of those, I believe, has been pretty well founded over the past few months. And one of the biggest arguments academically is whether or not the 0DT or next expiry options dampen volatility or exacerbate it. And so I think what Henry was showing was that there's a systematic nature to when and how some of these options trade. And I would argue that probably shows that actually the additional liquidity gives names more substance to have less volatility. So I think 0DT and next expiry options are a positive thing, and they create more opportunity for investors, as well as creating an idea of how and when stocks and futures can be hedged.
So you fall more on the vol dampening side rather than the, we've been jokingly referring to them for years now as gamma bombs on the network because it sounds good and it's kind of funny. You can put it on a t-shirt, but it was always, you're right, that open question, whether these were lurking time bombs ready to go off. We've seen some wild markets of late, and at least so far they haven't gone off to a sizable degree. So that probably adds a little bit of weight to the argument that maybe they aren't going to destroy the markets as we know it. Speaking of these wild markets, let's get into that a little bit. Obviously, SpotGamma, we're seeing some high gamma markets these days. Walk us through what you've been seeing pretty much since the start of this year in terms of just, the rapid escalation of whipsaw markets and Have you noticed any interesting trends on your platform? And also, what kind of feedback are you getting from your users? Are there any sort of interesting types of trades that they're looking for right now? What have you been seeing over these wild markets last couple of months?
Yeah, it's a great question. So we definitely see that the increase in trading volumes in the options market is not being matched by the volumes in the stock market. So there's been a lot less liquidity, especially given what we've seen following Tariff Day or Liberation Day or whichever moniker you use from early April. So what we've noticed is that when the options market is more active, especially in the large cap names and in the major indices, it's not being matched, as I just said, with the equity volumes and driving of names. So throughout the course of 2025, especially through January and into February, we've seen that options have been incredibly impactful in the Mag 7 and in the larger tech names. So we don't think that's going away. And coming even into this conference, we know that a lot of people are trying to find better ways to visualize and understand, as Henry's chart showed, exactly when and how to understand the options impact. It's interesting because it's almost showing up in somewhat of a barbell function. So in the names like Tesla, Nvidia, some of the big cap tech names, you see that there's a major impact for the options on an intraday basis. But then also in names that are less liquid, smaller cap names that trade less options, what matters is the relative amount of options trading versus the relative amount of equity trading. So if you have a heavier relationship between the options in an individual name, you'll see that spike or move the underlying in a more meaningful way. And we track that very closely at SpotGamma and project that out across all of our indicators.
Now, how does someone access these projections? Is it a subscription service? Can they get it through their broker? How do they access it?
Yeah, thanks for asking. And I definitely don't want to do an infomercial on us, but I'll give a little bit of an overview. What we do is we do two things. We provide expert analysis. So every morning and afternoon, Brent, our founder, writes a founder's note. So he's been doing this for 5 years religiously, except for one day when he was sick. So he gives color and context around where are we seeing set up in the morning and what happened over the course of the day and how are we setting up for tomorrow to close things out after 5 o'clock p.m. If you go back even into just April, after April 2nd, on April 3rd, there was a lot of concern in the markets as to how to interpret what the tariff impact would be. And we said very clearly in our founder's note and timestamped this on Twitter, be careful, 5,400 is the level of support. And we were at 5,600 in the morning. Market dropped right to that level. The following day on April 4th, on Friday, we saw the same effect where we said there is no support above 5,000 on the S&P. And from that point, even the market opened around 5,200, it very progressively moved downward throughout the day, testing 5,000 and closing just above it. So we believe that looking at the options flows on the larger indices, you can get a real sense of where support and resistance lies. For those indicators, we do have subscription services. There's 3 different levels to it. We provide our standard package, which gives you index levels overnight, as well as the expert analysis notes. We provide our pro level, which is by support and resistance levels on all individual U.S. equities, and then we have a real-time alpha level. And on those indicators, we have a heat map called Trace that projects across the S&P exactly how support and resistance is coming in throughout the day. You can scroll forward and back like a movie. We have an indicator called Hero, which is a hedging impact of real-time options. I actually wanted to name that the other people's position indicator for S&P, but we decided to go with the more respectable Hero moniker. So Hero is our intraday real-time analysis of every single U.S. option. So we break that out both in terms of what you can see from all options, the total options volumes. You can break the total trades into puts and calls, and then you can also dial in just 0DT or next expiry.
I can already hear the people listening to this right now. They always have the next question whenever we bring a new platform or a service on. They all say, that sounds awesome. But then when I find an interesting trade or level, can I hit the button and trade through you guys? Do you guys connect with any brokers, or is it they see the setup and they have to go construct it themselves on the brokerage platform? How does that work?
It's a great question. So for us, we have not yet tied into brokerages. Being here at the OIC conference, I've met with many of the top brokerages over the last
There's a few of them here, yes.
Yeah, that is where we are headed later this year into early 2026. Brent and me, we've both been blue chip trained. So again, being at Bank of America and Credit Suisse for Brent, and I was at a publicly traded Swiss bank, we're always very cautious about not giving trading advice or guidance, but instead giving real clear information and statistics. So one of our products called Compass is literally a 4-square grid that the left-hand side is green for bullish, the right-hand side is red for bearish. Above the middle x-axis are expensive options and below are cheap options. So you can have a watch list of 5, 10, 15 names and every morning check in and see exactly statistically based, is my name set up in a bullish or bearish position, and are options cheap or expensive? And if it's a bullish position and options are expensive, you might want to consider selling a put spread. So we have those tools within our system, which become quite sticky for our retail and institutional audience to be able to see their positioning on a daily basis. To go and trade in your own platforms is something that was still separate from how we currently operate. We have a dashboard that's web-based, so you can access it from anywhere. There's also mobile functionality, but it really is meant to be education fintech based versus trading execution. But that is where we are moving later.
That is the inevitable progression of every platform. When they all come in, even if they don't plan it, inevitably that's what people demand, right? So yeah,
Right.
you have to give them that one-click functionality. I've been down this road a few times. I've seen the progression. But, it's interesting. You talked about 0 days earlier, and that's obviously a hot button issue at a conference like this with so many exchanges and brokers floating around. A lot of people have been all hot and bothered about the NASDAQ proposal to add 0 days to the single name equity spectrum. This is something our listeners have been asking us about every year at this conference ever since they listed. Like, we love the SPX and everything else, but what else you got? Give us your Teslas and NVIDIAs of the world. There's been a lot of pushback on that for obvious reasons, a lot of conflicting ideas. Now NASDAQ finally out of the gate with the first real concrete proposal anyone's had to bring 0 day to the world of equities. It's Mag 7 plus 1 effectively. What are your thoughts on that? Have you heard it? Are you familiar with it? And do you think that's the right way to go?
I'm very familiar with it, and I've heard much debate on it. There's definitely two sides of this topic.
It is a contentious issue, to say the least.
Yes, I fall clearly on the list as much as you possibly want. I think that it is a good thing to create more liquidity. I think, as we talked about the first topic, more liquidity creates a dampening of volatility because people can trade around things. I fully respect your Gamma Bomb reference, and we actually have a Gamma Squeeze indicator at SpotGamma showing what names are having buildup that's hiding things that can go absolutely asymptotic and just explode upward. SpotGamma was actually highlighted. Our real breakout was in 2021. We were noted throughout the Wall Street Journal article explaining exactly what actually happened in GameStop. And then we co-authored a white paper with Columbia University, somewhat challenging the public position around how that squeeze took place.
Gamma squeeze, yeah.
Yeah. So with that deep level understanding, both myself and my partner at SpotGamma think that listing more options is a good thing. More liquidity is a good thing, and I think obviously the exchanges will benefit from more volume. I think that confiscating and not being able to show transparency to traders or reducing their access to tools is a bad thing, and I think this is the opposite. So I believe that you should have as much access to trade and do things that you want with your own money, with your own resources. I believe in empowerment. So the democratization of access to information. If you consider, I live in Minneapolis, there is a restriction that you can't bet more than a certain amount on any hand of blackjack singularly. And you also, when you play poker, they have something called spread limit. So it's a 2-100 spread limit. You can't bet more than $100. While here in Florida, no limit. You can bet as much as you want. And it's meant to protect the individual player. However, in reality, it actually just generates a higher amount of rake or higher amount of take for the casino. So it's not in the best interest of the player. So to draw that metaphor or that parallel, I think in this sense, listing more options, more liquidity on names that are well known, well structured, and publicly compliance-wise regulated is a good thing.
So you're not concerned about, after hours contra exercise hitting retail or maybe cash settled type of options, or you're okay with this approach?
I mean, cash settled options can be a little more clean, so people understand exactly what happens to their position. But it again comes down to a basis of education. I mean, we do twice a week webinars to try to make sure that you know what you're doing and how to understand options regulations. Whether you trade through any of the major brokerages, you often have to fill out and apply for level 1, 2, 3, or 4 options clearance before trading options. So if those pieces are in place, I don't think it's manipulative or negative to give people more resources and more tools to trade stocks. I think people should understand the risk that they're getting into. I like the idea that you should first learn how to buy calls and buy puts before you're allowed to regulatorily sell calls and puts and have that level of risk so you really understand it. But I think that at the end of the day, I'm always going to be a proponent of more democratization of both data and access to the markets.
I perhaps selfishly am happy that they didn't go with the cash settler route because I wasn't looking forward to the bombardment of emails and questions. What is this? I thought I sold puts in Apple. Why am I not getting the stock? There would be a huge educational lift there that I don't think anyone really wanted to deal with. So contra exercise issues aside, this might be the best of the bad options that they had in front of them out there. Well, Matt, I appreciate you joining us here and taking a little time out of your conference to chat with our listeners. And we always like to leave our audience wanting more. So before we wrap up, if you have any hints, any teases of some cool new bells and whistles coming down the pike from you guys over there at SpotGamma, now is the time, sir. The floor is yours.
Okay, well, thanks for that. So again, when the volatility that we've seen for the past few months is going to continue. I believe that our Commander-in-Chief just said he has a very tremendous and marvelous update coming in the next 24 hours. Things are going to constantly move the market and jolt it and have increased volatility. It's here to stay. So our goal is to have any equities, options, or futures trader come to SpotGamma, be able to understand if the names that they're trading are positioned in a bullish or bearish nature, where those support and resistance levels lie, and then either join our webinars or Discord environment to be able to get more support from their peer community and source new trading ideas. So we're happy to have anybody come in that wants to come check us out at spotgamma.com. And again, I'm grateful to be here with you today.
Well, Matt, great catching up with you. Great to learn a little bit about SpotGamma, and we'll look forward to seeing how all this unfolds in the marketplace in the coming months.
Sounds great. Thank you.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.